Money market funds are a type of investment. They are designed to offer investors a safe place to invest easily accessible, cash-equivalent assets. These funds invest in short-term, high-quality investments issued by government and corporate entities. They are very low risk. This is because they invest in highly liquid short-term instruments, which are less likely to lose value. You make money in a few different ways. The fund earns interest from the investments it holds. This interest is then passed on to you, the investor. It may also pay dividends. These dividends are typically paid out monthly and can be reinvested to purchase more shares of the fund. This money gets added to your account. Over time, these small amounts can add up, increasing the value of your investment. This means your investment grows over time. The growth might not be as rapid as with other types of investments, but it is steady and reliable. Money market funds are very safe. They are regulated by the Securities and Exchange Commission, SEC, which imposes strict rules on the quality, maturity, and diversity of the investments held by the fund. This makes them good for beginners. If you're new to investing, money market funds can be a great way to start because they offer stability and liquidity. They are also very liquid. This means you can easily convert your shares into cash without significant loss of value. You can get your money out quickly if you need it. This is particularly useful in case of emergencies or unexpected expenses. This is different from some investments. For instance, real estate or certain stocks might take longer to sell and convert into cash. For example, you might lose money if you sell a stock at the wrong time. Stocks can be volatile, and their value can fluctuate significantly in a short period. Think of a money market fund like a savings account. It's a place to put your money where it can earn interest while remaining relatively safe. It's a place to put your money. Unlike a savings account, however, money market funds typically offer higher returns. It earns more interest than a regular savings account. This is because the fund invests in higher yielding instruments. However, it is still very safe. The risk of losing your principal investment is minimal. You won't get rich quick with a money market fund. The returns are modest compared to more aggressive investment options. But it's a good way to grow your money slowly and safely. Over time, the interest and dividends can compound, leading to a significant increase in your investment's value. Including money market funds in your investment portfolio can provide a stable foundation. They can act as a buffer against more volatile investments, helping to balance risk and reward. In summary, money market funds are an excellent choice for those seeking a low-risk, liquid investment. They offer a safe way to earn a modest return while keeping your money accessible. Whether you're a beginner or an experienced investor, money market funds can provide peace of mind and financial security. Compound interest is like magic. It's the key to building wealth over time. Here's how it works. You earn interest on your investment. That interest is then added to your principal. The next time interest is calculated, it's calculated on the new, larger amount. This means your money grows faster and faster. It's like a snowball rolling downhill. The snowball gets bigger and bigger as it rolls. Compound interest is the same way. Your money grows faster the longer you leave it invested. Let's say you invest $100. It earns 5% interest per year. After 1 year, you'll have $105. But after 2 years, you'll have $110.25. You earned an extra 25 cents because of compound interest. Getting started with money market funds is easy. First, you need to open an account with a brokerage firm. There are many different brokerage firms out there. Some popular options include Fidelity, Schwab, and Vanguard. Once you have an account, you can choose a money market fund to invest in. Each fund has a different interest rate. They also have different fees. Be sure to compare different funds before you invest. You can invest in a money market fund with a small amount of money. Some funds even let you start with as little as $1. This makes it easy to get started, even if you don't have a lot of money to invest. Choosing the right money market fund is important. You want to find a fund with a good interest rate, but you also want to make sure the fund is safe. Look for funds with a high credit rating, as this means they are less likely to lose money. You should also consider the fees charged by the fund. Some funds charge higher fees than others, and these fees can eat into your profits. Choose a fund with low fees to maximize your returns, and don't be afraid to ask for help. If you're not sure which fund is right for you, talk to a financial advisor. A financial advisor can help you choose a fund that meets your needs. The key to building wealth is consistency. Invest a little bit of money every month and don't worry about timing the market. Just keep investing consistently. Over time, your money will grow. It's like planting a tree. You plant a small seed and water it regularly. Over time, the seed grows into a strong tree. Investing is the same way. You plant a small amount of money and keep adding to it regularly. Over time, your money will grow into a large sum. Don't get discouraged if you don't see results immediately. It takes time to build wealth. Just keep investing consistently, and you'll be amazed at how much your money can grow over time. Investing is a lifelong journey. There's always more to learn. Read books, attend seminars, and talk to financial advisors. The more you learn, the better investor you'll become. Don't be afraid to make mistakes. Everyone makes them. The important thing is to learn from your mistakes and not let them discourage you. Use them as an opportunity to grow. Investing is one of the best things you can do for your future. It allows you to build wealth over time and gives you financial security. Start investing today, you'll be glad you did.